I think the ATO have been vocal about it for some time. And so, people are getting letters and getting chased up on this stuff. And I think the best thing you can do is be administering this stuff as actively as you can.
John, country manager, Coinbase Australia. Give me a bit of an intro. What's been happening over the last few weeks for you?
Yeah, hey, thanks, Danny. And firstly, thanks for having us. I think this initiative with Koinly is kind of well overdue. We're at a really kind of important, I think, inflection point in the journey for crypto and digital assets in Australia. I think we were chatting, kind of before this interview about the landscape. And if you look kind of around the world, and I'm lucky in this role, we're seeing lots of different kind of speeds and momentums of regulators. But within that geography, I think they're all crypto forward. And then if you come down to this geo, if we comp it to the US, for example, I would say people who hold crypto and kind of the crypto forwardness of that audience, you kind of have crypto native, crypto curious, and then or crypto forward and crypto curious, and then the rest. And so I think in this environment, probably a quarter of that market holding that asset are one of the first two labels, crypto native or crypto curious.
Yeah, right.
And so that's when I'm talking to my peers and management, that's where we see the opportunity. Really high adoption rates, pretty savvy users, really familiar with equities.
Yeah, and on token mapping, I mean, we look at the outcomes of token mapping, I suppose, from a tax perspective. What will that actually mean for everyday users when it comes to crypto taxes, and will that inform perhaps some of the guidance we'll see from the ATO and Treasury on actual kind of tax principles, tax rules in crypto? But how important is it to have this well-defined kind of framework of functions within the crypto space, which token mapping is really actually doing? And I guess, do you see that having an impact on other areas of regulation like tax as well, and not just from a, I guess, financial products perspective?
Yeah, I think the watchword, and I learned this myself personally coming back to Australia, coming up to a decade ago. I probably returned to Australia with a bit of naivety, saying, tax office will give you a bit of leeway here and there. You've got a few years grace period. Pretty quickly you learn that you might have 1 year's grace period, but it's really important to be kind of filing regularly and being, just very kind of consistent with what you do and also proactive with what you do. You should be doing that. And, your branding, for example, is all over buses and, you got signage. I remember landing in Canberra Airport and seeing your signage right there, and minutes later I was in front of the Treasury's office. I think the ATO have been vocal about it for some time. And so, people are getting letters and getting chased up on this stuff. And I think the best thing you can do is be, very much administering this stuff as actively as you can.
Yeah, it's interesting because if you look at, obviously where we are from a regulatory perspective now, we obviously, as you mentioned, token mapping is proceeding nicely, and hopefully we'll get some more on that in the next few weeks or months. But really, if you look at the tax side of things, there's been guidance since 2014. And, when it comes to regulation, tax being a big part of it, tends to be the part where the regulators, clock onto very quickly, because particularly when it was the crypto bull markets, people making a lot of money in crypto. And, of course, like anything, if you're making money in something, you do have to pay tax on it. That's just part of life. And so, that was one of the first pieces of guidance we actually saw in the crypto space. And, one of them was around GST. The other one was around is Bitcoin. And they did refer to crypto exclusively as Bitcoin in, 2014. Is it foreign currency for tax purposes? Do people use it as a means of exchange across borders? And if not, what is it? And the consensus was and still is that crypto is property. It's like shares, investment properties. It's subject to capital gain if you are an investor. And so that's been the view of the ATO. And Treasury, over the years, that's been reinforced multiple times as well. And as we've gone through that period, we've seen various iterations of web guidance to provide some level of clarity to various different crypto terms. Recently we've had terms introduced in the ATO guidance like staking, airdrops, and initial allocation airdrops, that's actually a new one for 2022. So essentially, if you've been airdropped something, it's the first of its kind, do you have to pay tax on it or not? And the guidance essentially is saying now that if it's the first of its kind, not as income when it's received, it's later taxable as a capital gain.
I think people in the DeFi world would like there to be some carve out for NFTs, as if NFTs are something that are just kind of reserved for rap musicians and super creative people kind of in the streets of Newtown around where we're doing this podcast and the creatives out there. But, with the kind of Ethereum link to an NFT, you can link an NFT to a share certificate or a piece of property. And so in that regard, to your point, they're an asset, and thereby they can be accruing value or increasing in value or losing value. And so they need to be disclosed.
It's such an interesting point, isn't it? Particularly with NFTs. What is an NFT? Surely it depends on what you're using it for from person to person, use case to use case.
Yeah, but I think as soon as the first one's used for a certain type of transaction, then that is the default proxy, and we maybe don't need to go to court for that to be proven. But I don't think as a consumer or as someone in the crypto space, you can be optimistic and just kind of say in your defense, but it was used for my music recording or my sister's portrait of our family or whatever it was. You're effectively fractionalizing anything with an NFT, and that's the power of the technology, right? So in that regard, these definitions and these kind of labels are coming actually from the ATO before they're going to come from the other regulators. So this next phase of the token mapping exercise will be kind of the first consult, and the feedback will come out of that. And we believe, and it's deemed to be focusing around licensing and custody. And so in that regard, it's what type of licensing regime will crypto exchanges fall under? And previously they've been under Austrac, and that's really AML and kind of CTF type obligations, and that was well addressed, and that's been seriously addressed by the first round of the regulation, and I think everyone's compliant. And then will the next round of licensing be more burdensome, more costly, more detailed? Will you need officers locally on the ground in Australia, compliance, et cetera, et cetera? I think that potentially makes it harder for a lot of the smaller exchanges to operate because the governance costs are high for a small operation, maybe with a handful of people, if you need to employ those professionals.
You mentioned around the token mapping exercise and the outcome. You're building, I guess, consumer protection. I guess the way I see it is you want to protect consumers, but you don't want to harm the innovation that the industry is capable of, the technology potentially has. But tell me a little bit around Coinbase's approach to building that trust and safety in this space, particularly at the moment.
Sure. Well, I think in the most simplistic terms, the fact that we're listed in the US, gone through a kind of IPO process and under the spotlight as a publicly traded equity, our filings and our disclosures well and above and beyond most of the players in the space. And that's an obligation that we took. It's costly and it's expensive, but it's something that is absolutely central to the whole mandate of the organization. We have a global strategy about going broad and going deep. And in go broad markets, we want to offer people a suite of products either through a wallet or an offshore exchange or an international exchange. And in a go deep market, we want to be, and we are, fully regulated and compliant in that market as an onshore entity. But beyond that, we're a tech native company. We're not coming out of a bank. We're not TradFi. We're an engineering company by design. So in that regard, I think we're well suited. And a lot of that cybersecurity knowledge we actually share with agencies here. So there's a new cybercrime kind of task force here, a new coordinator following Clear the Optus and Medibank breaches. And then the banks, also are taking cybercrime incredibly seriously. So we're working with the banks as well and their teams. And so, for example, things like custody or things like, ledger, cold storage, hot storage, we'll do deep dive kind of sessions with a lot of these partners so they understand our systems. Another group to point out here, and this is really, inspiring as a taxpayer here, the AFP, the Australian Federal Police, they have a joint policing task force, JP3C, which brings all of the state police, and they have people sitting inside this unit in Surrey Hills from the big four banks, working on these multi-year, multi-jurisdictional, cybercrime issues that relate specifically to crypto and stuff for the dark web, big scams, big fraud cases. And they've got, a team of like 25 people, and a lot of those people are crypto native. So these things they get a lot of airtime in the media as doomsday type stuff, and crypto's all people on the dark web, and everyone in crypto is kind of a criminal. That's not factual. That's a legacy label. If you look at broader scams and fraud overall, we're a fraction of the amount. The point is, we're sharing information with other big exchanges on IP addresses that we know are problematic. And once you do have an issue on the blockchain, you can then trace things back quite successfully in a manner that traditional banks can't necessarily do with, let's say, phone fraud or identity fraud, when people have found people's documentation, et cetera, et cetera.
And we see a lot of, I suppose the messaging is changing slightly from perhaps before in the tax world, where people would say, oh, well, do I have to pay tax on my crypto? And, some people thinking, oh, is crypto a place to hide from a tax perspective? And we're seeing that completely shift now. We try and put a lot of education out there on crypto taxes. The ATO and tax authorities globally are being way more vocal. Exchanges like yourselves are also providing education, partnerships with tax softwares like Koinly. And I think, it's important to recognize that, particularly, and this is where some of our the synergies come in. People just want to comply and do the right thing. And actually, they recognize, hey, I've made a bunch of money, or I've got some losses in crypto. I know I have some tax obligations. If you look at the tax rules, okay, crypto is lumped into this bucket of other items that are property, shares and so on. But really, one of the fundamental differences, as you said, people can trade crypto so easily. They can be, particularly during lockdown, people were trading crypto on the apps. A click of a button goes from one crypto asset to another. So let's say going Bitcoin to ETH, you've held Bitcoin, you're making a disposal as if you were selling that Bitcoin into fiat currency. So then you have to record, okay, well, what was your market value when you purchased the Bitcoin? Have you made a gain or a loss on the date and the prices in which you sold? And then you're also then reacquiring another crypto asset, which is ETH. So then you have to record your market values, your pricing, and hold that until you then go and later sell it. That's a lot of people aren't thinking about the record keeping side of things, which they have the obligation and onus to actually prepare for tax time. And so that's one of the challenges we see, and it's obviously exacerbated by just being able to trade so seamlessly and easily. And you mentioned as well with accountants, bringing accountants up to speed on crypto is no easy task. Let me tell you, there's certainly a gap in that space at the moment. I suppose the issue is there's a lot of demand for crypto taxation, advice, and always do see an accountant or speak to accountants, use accountants if you are trading crypto. Certainly, you may have a bunch of other non-crypto financial affairs during the year, but that portion of crypto that you've been trading, your accountant will still have to deal with it, even if they don't want to. So that's the challenge that we're seeing, is just the upskilling.
Yeah, 100%. I mean, I think you're right. The laggard in this conversation is probably the kind of traditional suburban accountant, right? Because I've even been talking to people in Canberra about the speed at which MyGov is going to get kind of upgraded in terms of a national identity platform for so many services in Australia. I get my ATO statements from MyGov, and they come in your inbox, and if you miss it, you go like, oh, I didn't receive it in the mail, so maybe I should be given some grace for not having paid it, or there'll be some follow-on amount of tax that you have to pay that you might be able to pay with your super or what have you. All of that stuff's getting digitized, right? And that's what should be happening. That's why we're in digital assets and crypto, and why we want stuff on the blockchain, because we don't want it, over in that filing cabinet, whereby if someone burns that piece of paper or it gets damaged or whatever is not there, that is the raison d'etre of the whole industry, right? Let's put this on this permissionless or permission blockchain where there is this transparency. Thanks for having us today. Great to be working with Koinly and Coinbase Australia, and look forward to more of these sessions in the future.
Yeah, thanks, John. Thanks for being with us today. It's been great to chat about crypto and taxes.